1st of November 2023, the Federal Reserve ought to maintain the interest rate at above 5%, a 22-year high despite the slowing inflation. So while this is good news for the businesses and consumers to take a breather, the Fed confirms that it is still a long way to go before interest rates will come down again. So with that in mind, right, we're gonna dive into the various sectors and the stocks that will hold up well during this higher for longer interest rate environment. So one sector that tends to benefit the most is the financial industry. So financial industry, we're talking about banks, brokerages, mortgage companies, and even the insurers, because their earnings often increase as interest rate move higher, because they can earn higher by lending the money to other people, or they can earn the spread with the huge cash balances in their portfolio. Okay, so over here at Simply Wall Street, okay, this is a stock analysis platform. So I already filtered for the US market, okay, and now I just need to filter by the industry. So over here we can see that there are banks, there are those financial services sector, all right, and in the US there are over 1,700 financial companies. All right, and we can see that there are a few familiar names. Berkshire Hathaway is one of them. This is a very diversified conglomerate run by Warren Buffett. They have a lot of cash, which will earn them a lot of net interest income because they are able to park it to money market funds and grow their cash due to the high interest rates. Other than that, we also have Visa, JP Morgan, Chase, um, Mastercard, and also a lot of the renowned banks like Bank of America, Wells Fargo, and even Morgan Stanley. All right, and moving on to the Singapore market. Okay, so what you need to do is just find Singapore, and then the results are out. So Singapore, we have 29 financial companies. All right. As usual, we have the three local banks: DBS, OCBC, and UOB. On top of that, we have our monopoly exchange, Singapore Exchange. This is our hallmark of our financial hub, right? And on top of that, we have the renowned iFast Corporation. But on this note, right, you can also check out the smaller players, which if you scroll down, you can check out um, smaller, those financial institutions like Hong Leong Finance, Sing Investments and Finance, and even the Singapura Finance. So what they do is they cater to consumers and the SMEs in Singapore with better rates compared to the bigger banks lah, because they are smaller players. So if this warrants a second look, you can go and take a look at these smaller players as well. On the other hand, I think it's also important that we spend some time to talk about DBS recent so-called ban by the MAS due to their constant disruption to the services. I believe by now you would have heard of the news where DBS is banned from starting or acquiring new businesses, and they cannot reduce any ATMs or branches until things get better. Although this may seem like a big hoo-ha, right? If I were to look at the outlook for DBS, it's still pretty positive. As you can see here, there's still upside bias to the net interest margin for DBS from the current level, because the hike in the US interest rate was not factored in for DBS previously. And there's also potential for repricing of the commercial loans to hike up DBS profit in the near term. In fact, DBS foresee another record year as the first half drivers are sustained into the second half. That being said, we still need to compare DBS to the other banking peers like UOB, OCBC, and even the global peers like Bank of America, JP Morgan to get a complete picture. So if you want me to do a video to compare all the banks, can you do me a favor? Write down your comment as I love banks, okay, in the comments box down below. So anyway, who don't love banks nowadays when they are giving out more than 4% dividend yields, right? Now onto our second sector, the utilities sector. So according to this book title called Invest with the Fed, Johnson and his co-authors examined the stock returns from 1966 all the way to 2020 and found that certain stock market sectors perform better than other sectors when rates are increasing. And surprisingly, the best performing sectors when rates are rising are utilities, followed by energy, followed by consumer goods, and then foods. The reason they gave: people need to eat, put gas into their cars, brush their teeth, and heat their home, regardless of the direction of interest rates. Okay, so now let us check out what are the utility stocks in the US market. Okay, so I've already changed it to the US market. So now what we just need to do is to find utilities, okay, and the industry itself. And automatically all the results are populated. Okay, so overall there are 131 companies. You can sort by different scores. Like for example, if you want market cap, the largest companies will appear on top. And if you want like maybe 3-year earnings growth estimate or PEG ratio, you can also choose to do that. All right. So I'm just going to go by market cap, and you can see here that we have many good established companies in US. So one of it is Next Era Energy. So they generate and sell all this electric power to consumers in the North America. And then we have Southern Company, we have American Electric Power, Constellation Energy. So all these are the electricity production companies. Right. Now let's move on to the Singapore market. So in order to go to the Singapore market, you just search for Singapore again, and then there you have it. We only have 10 companies in our local market, and I believe many of y'all have already heard of the two largest one, which is Sembcorp Industry, where they generate electricity not only in Singapore but also in India, in other developing countries. And also, when you talk about the utility bills, most often you will be linked to City Spring, which is under Keppel Infrastructure Trust. Move on to the next one. Don't forget to hit that subscribe button and ring the notification bell so you never miss an update on financial TVs and investing ideas. As usual, to show my appreciation, here's a financial meme for you. Okay, when we talk about food, it's not those home cooked food we're talking about. It's the F&B related sector that we are referring to with household names like Coca-Cola, F&N, and even those supermarkets like Fair Price and Sheng Siong. It's easy to understand why the food sector in general perform well during high interest rate environments. Because firstly, food is considered a defensive sector, meaning it tends to be less sensitive to economic fluctuations. Regardless of the economic conditions, people like you and me still need to eat, right? And more importantly, there's this cost pass-through mechanism that we need to know. This mechanism implies that while some food companies may face higher borrowing costs due to higher interest rates, they often have the ability to pass it on to consumers by increasing prices directly, especially if the entire sector is facing the same cost increase. In turn, this can help to protect the company profit margins and grow their stock prices in the long run. So jumping back to simply Wall Street, okay, we go to the US market again and look for F&B sector. Okay, we have a lot of different subsectors like uh, food retail, beverage, drug retail, food retail, and things like that. But in general, they are all related to the F&B sector. And we have a lot of familiar names. Over here we have Walmart, Costco, Coca-Cola, PepsiCo, all right, Monster Beverage, Kraft Heinz, which is owned by Warren Buffett, all right, and even the food production company like this Archer Daniels Midland, General Mills, which and like Roger, which do the cereal products, okay, and even Hershey's chocolates. So there are a lot of names that we in Singapore are familiar because we import all these products right into Singapore. What about the Singapore market? So if you look at the Singapore sector again, okay, for the food industry, we have much lesser companies, 34 companies. Majority of them are like the production or rather the downstream companies like Wilmar, Olam, Golden Agri, First Resources. On top of that, on the other hand, we also have companies like Sheng Siong, which is the supermarket, F&N, they make the meal, the McDonald meal, and all that, and also Delphi chocolate. You can go and take a look in Fair Price itself, and also Food Empire, which manufacture these consumer staple goods in the Russia and Eastern Europe. Also, they have also expanded to Vietnam, and even our favorite, okay, Gardenia bread, which is made by QAF Limited. Now, a few things before we wrap up. So remember that while these sectors may benefit from rising interest rates, every investment carries risk. Okay, so do stay updated on market news by following my channel. And if you find this video helpful for you, do remember to help me smash the like button and subscribe to my YouTube channel for more videos like this. And don't forget to check out this video over here talking about 5 Singapore stocks trading near 52 weeks low. With that, I will see you in the next one. Thanks for watching and ciao.